Hi there, welcome to my video, and I'm going to start off this week with a bit of macro news. I very rarely do macro news. It's all micro, it's all stocks and shares, specific companies. I'm going to do two updates on companies, also look at charts of companies I hold and all that stuff, and also show you my performance. But I'm going to start with macro, and this is because back in September of last year, I started selling resource stocks and oil and gas stocks, okay? Because there's a lot of bad data coming up from China. But by bad, I mean, obviously data's not bad, but negative data. And I didn't like the sound of it. And I thought China's a massive play on global growth. All right? So, all resource companies like Copper Produce or Copper Explorers or Nickel or Iron Ore, any of that kind of stuff, that is basically a leverage play on China. China consumes half of the world's commodities. Okay, like copper, all that stuff, and so the future growth. If it's slowing down, that'll have a knock-on effect in prices, in sentiment, everything. Luckily, I called it quite well, and it's a bit of fluke, a bit of. I sold about. It must have been half my holdings, and at the moment, at the time, I thought it was quite over the top, quite exaggerated. But now, it probably wasn't enough. But now I do not hold any resource stocks or oil and gas stocks. And oil, copper are a play on global growth, and China is the driver of global growth. It's still expanding. It's a massive economy. It's a fast-growing economy as well. America's also a big economy, but it's not fast-growing like China. China's still, sort of expanding at over 6%, which is, for a big economy like that, it's huge. 1.5 billion people. So it's slowing down, and recessions don't happen overnight, and they take a long time to sort of slow down, and we're still seeing the evidence of this. And what we had with UK GDP is that we've seen now that the second quarter GDP for the UK contracted by 0.2%. So it got smaller compared to the previous quarter. Now, 2 quarters of contraction is a recession. So essentially, we're only 1 quarter away from a recession. And I said this on Twitter, and some said that's a bit negative. Well, no, it's a fact. And if you ignore that, then your portfolio can suffer. And so I've been talking recently about how to make money in a bear market. This is not me being pessimistic for the sake of being pessimistic. All I want from my portfolio is a good return. Now, how do you get that? I mean, let me ask you the question there. Let's say, I'm not saying it's going to happen, but let's say, and if you're a good investor, you should be asking yourself this question. Let's say stock markets around the world start to climb lower on global growth worries, and we start hitting recession territory. What have you done to hedge against this, to protect your portfolio? Have you done anything? Because it's worth thinking about, genuinely. And do you know what? I started preparing too early, really, because I did miss a bounce in oil and gas and resource stocks, but they've also grind lower. And I said at the time, any company that has to go back to the market to raise money, especially resource oil and gas, are going to struggle, going to find it hard work. They're going to probably have to raise at discounted rates and not a lot of cash either, for not a lot of money. And so it's probably going to have to come back to the market. So at the time I said, what I'm looking for is companies that have enough cash, take them through at least 12 months, and hopefully never ever go back to the market again. That money will take them through to profitability. And that way that'll insulate them against the market. But in a market downturn, right? Now they're saying this. Sajid Javid, the chancellor, said it's just so we're not going to head for the recession. He doesn't know that. He didn't know we're going to have contraction in Q2. He's saying, like I say, what happens is manufacturers stockpiled because they expected Brexit to happen earlier, and they expected supply chains to break down a little bit. So they stockpiled, and that boosted the last quarter. And now that's gone by. The stockpile, they're running their inventories down, so they're not buying any more stock. They're running it down, but it's still global growth is slowing down. Then this has contracted this quarter. Now, what happens if you contract next quarter? Because let's be honest. Let me ask you a question. Another question. All right. If you are the CEO of a big company, with operations in Europe, in America, in the UK, and you're looking at this, Q2 is contracted. Right? In Germany, the biggest economy in Europe, it's contracted. Right? There's global growth rates around the world. That's why central banks are lowering their interest rates, including the Fed in America. Their economy is doing quite well, but they're still reducing the interest rate because they're worried about global growth and tariffs. Now, when you have this uncertainty, and we're just about to come to Brexit, apparently, Boris Johnson reckons he's going to get UK out of Europe on the 31st of October. Do you honestly think that's going to run smoothly through Parliament? And I could completely believe, listen, don't worry about, I don't care if you're a Remainer or Leaver, it doesn't matter. That is not the point. You've got to understand what's best for the portfolio, okay? So whether you're super bullish on Brexit or whether you're not, whether you think it's a disaster, you've got to prepare for both scenarios. So what are you doing to protect yourself against a downturn? Because I see this, Boris Johnson, we're preparing for a no-deal Brexit, like it's going to be happening seamlessly and smoothly. Oh yeah, of course it will. It won't. There will be arguments, there will be chaos, disruption in Parliament, there will be people outside Parliament again protesting. There'll be a lot of problems. Now, that's a known risk coming up. We also have, the trade tariff war between US and China. That's not going very well. I just genuinely think we've got a lot of issues ahead of us. And in the meantime, with all this uncertainty, like I said, I honestly believe whether we stay in or go out, doing it soon as is the best thing. It's the uncertainty that's paralysing British business and European business. On CNBC, which is an American sort of business show, they mention Brexit a lot now. They're genuinely worried about it. There's a lot of Europe's worried about it. So what's happening is, if you are a CEO, like I said again, of a big corporation, a big institution, and you employ a lot of people, and global growth is a big worry, and UK just contracted, Germany just contracted. Let me tell, what are you going to do? Are you going to, put more money and plough more money into investment? No, global growth is slowing down. Or are you going to hold fire, or even pull back a bit, or even reduce investment? What are you likely to do? To increase investment when global growth is grinding to it slower, or pull back on it? Now, if you've got a couple of big corporations do this, right, it has a massive knock-on effect, and everyone else starts to tighten their belts. That's how recessions happen. And I feel now, with massive uncertainty ahead of us, I feel it could go into recession. So, start hedging. And I mean this now. I did buy a gold ETF a long time back, got bored with it, sold it. I've just started, this is what I'm doing to hedge against my portfolio. All I want to do is, achieve yearly growth in my portfolio. That's all I'm going to grow every year. I'm going to make a profit every year. Now, how I'm doing this year and next, I'm starting to take on board some gold. I'm starting to go into a dividend-paying ETF as well, because as share price goes lower, the yield goes up. Okay. Now, these returns may not be as stellar as in a growth year when I'm just going on capital gains and buying low, selling high, but it's about trying to keep that portfolio achieve growth or achieve profitability on hopefully a quarterly, half yearly, and a yearly basis. So all I'm saying is, this is not a bearish thing, because some of the best gains can be made out of the back of a recession. So be prepared to take advantage of that. But in the meantime, when the stock market goes lower, what goes higher? That's all you've got to think. When the stock market goes lower, what goes higher? A couple of things. Gold, okay? Yields, dividend yields. So play wisely, hedge. That's what I'm doing. I've literally scaled in a tiny bit into a gold ETF. It's up too high at the moment. The RSI is at 80. It's nuts. But I just want to get my little toenail in there, just to when I got a bit of skin in the game, I pay more attention. But I will be hopefully on any dips buying more of the gold ETF. I'm already ratcheted up in my dividend-paying ETF. I'm getting a nice, like I said, the one I talk about, there's plenty out there, by plenty of. If you're going for a dividend-paying ETF, always look at the total expense ratio, okay? I mean, the one I'm looking at is below half of 1%. You should never look at a fund or anything like that, if it's managed, above 1%. It depends what it is. If it's a tracker fund, of course, then it just tracks. It doesn't need managing, so it's very cheap. Can be as low as the Vanguard's, as low as 0.2%. But try and look at the total expense ratio, get that down. And I've done sort of previous videos on, the dividend ETF that I bought below, but there are plenty around, and check that out. That's all I'm saying. Be careful, hedge. What are you going to do if the stock market goes lower? And the other thing I have done is I've reduced positions in all my stocks. I don't know how I'll hold. The maximum exposure I have in any one stock is 6% of my entire portfolio worth. 6% in one stock. I got about 3 stocks at 6%, and even more than that. So I got some cash as well. Because, like I said, take advantage when the stock market crashes, or if we do have a recession. If I'm not trying to be the bear here. I'm just saying if it does happen, you've got to be prepared to take advantage of the, there's plenty of companies out there, plenty of bargains out there that will fly in time. But at the moment, we're in a hazy area of uncertainty. And I think play it safe. There's plenty of time to make money. But now, play it safe. All right? I hope that makes sense. Okay. Don't forget, if you like this video, then hit the subscribe button that's below and the notification bell. Okay? You won't see the bell until you hit the subscribe button. But if you do hit the bell, you'll be alerted via email whenever I release a video, okay? Just hitting subscribe doesn't really do anything. I didn't realize this. But unless you come on YouTube, you'll see my videos, basically. If you come on YouTube, you'll see my videos if you subscribe. But if you notification, even when you're not on YouTube, you get notified, all right? Any comments below, by all means. And check out below, loads of videos below, previous videos of companies I talk about. So, I want to talk about news on Polarean. There's an opportunity here. I really believe in the tech of the stock. I've gone on about it so many times. Phase 3 trial's going to be ending soon. Enrollment's going to be full up, satisfying enrollment, and the trials will take 4 to 6 weeks after that readout. I think it's a no-brainer. I genuinely think it'll fly. But we've got an issue here. There's a bit of an issue. Okay, this is a shareholder register. Amphion is the biggest shareholder. Why have I put them in red? Because they'll need to sell some shares, I think. All right, because they are in trouble. They're suspended, but they have a loan. I think the loan is about 2.8. I'll get to that in a bit. But they have a loan, and these shares are basically security. These shares are in this company, in Polarean, and in Motive Bio. Okay, so this is the last announcement by Polarean, basically. But this is Amphion. The loan balance outstanding pursuant to the facility on the 7th of July. After the sale of Motive Bears, prior to the share of Polarean shares, they just sold 25 grand, so it's pretty much of Polarean. But approximately $2.8 million, excluding the lender's share of the pledged share price, approximately 179. So let's say $2.9 million. All right, what's that? 2.6 million pounds for that. They say the current value of the remaining shares pledged as security for outstanding loan is approximately 5.3 million. So Amphion, they've got enough assets to cover the liability, to cover the loan, but they have to sell the shares. But the trouble is, the loan expires on the 30th of September, which is the end of next month, which, what are we, July, August, September. So, oddly, that is when Polarean will have completed enrollment of their phase 3. So they've said that Amphion is working hard to try and replace or amend the facility to extend the repayment date past 30th of September 2019 to ensure the company does not have to sell more shares than is entirely necessary. We are excited by and steadfastly believe in the future prospects of Polarean and its important technology. Now, why do I think they want to extend this? This is what I think. They think that phase 3 trials are going to be successful. That's why they haven't sold any shares compared to the ones they've sold in Motive Bio. Okay, so they think they're going to be successful. And then the share price will rise on the announcement that they've passed phase 3, and the shares will be worth a lot more. So that's what they say there. We don't want to have to sell more shares than entirely necessary. So let's say the shares double. Let's sell half of the shares. Well, not in that, because they're 5.3 million pounds worth, 2.9 that thing, so less than half of that, pretty much. So, pretty much. So they want to get the phase 3 data out of the way because they believe it's going to work, I think. That way they have to sell less shares and, of course, pay off less of the loan. Amphion remains highly cash constrained and continues to work to consider both its short-term and medium-term finances. They're still suspended. But, so they must sell shares, but I think they'll sell them, hopefully, when they're rising, when phase 3 has been passed. Another bit of news from Xeros. It sells the majority of US high-affinity customer base. So, let me just say, I like Xeros. I've done a couple of videos on it before. The thing I don't like, the CEO is a manager. He's not an owner. He's been brought in to sort of help this company. He's highly paid. It seems like he's doing a good job. doesn't have any stock in the company. That's one of the boxes I like ticked, you know. Mark, I think, earns about 300 grand a year. Loss-making company. He owns 30 grand of stock. That's all. Anyway, I love the tech, though. I just think it plays into everything that's happening in this world. Water saving, plastics, microplastics, all that. So they have signed 2 agreements to sell the majority of its high-affinity US commercial laundry customer portfolio of lease machines to Eastern Laundry Systems and Wash IQ, previously known as Viking Services. Hydrofinity received upfront payment of $109,000. It's a little bit of cash, but let's be honest, the loss Xeros was making last year of 24 million, I can't remember now, but it's a lot. It's a drop in the ocean. It's appropriate. An ongoing license fee for the provision of Xorbs TM to L's and WIQ. All right, so the proceeds from the transaction will fund ongoing hydrofinity. So this is what they're doing. These leases generated an adjusted gross loss of 376,000. The commercial washing machines had no value on the group's balance sheet. The value having been written down during 2018 following the invention and patent of Xeros's new Xtrum TM designed for commercial washing machines. So 164. So this agreement reflects Hydrofinity's strategy to reduce its physical presence in markets and move to a full license model. The group expects further sales of smaller portfolios to similar regional distributors in the US over the coming months. So the thing is, this is what Mark says here, but I'll get a mark in a bit. So they Xeros, to prove their technology, had to enter the market as a player. It costs a lot of money, this, of course, to generate sales, to have physical washing machines and actually start businesses in these areas, rather than just say to companies, we've got this tech, can you try it in your machines? Or they had to create the tech. It cost them a lot of money, research and development. Now they get to the stage where it's proven tech, and now they can license it out, so reduce their physical presence and earn nice money off a license fee, So it's just recurring revenue, high margin, and the money's already been invested. So they're going from R&D to commercialization. I like that about the company. It's a transitional year, but they did say they still have to raise money. This is Mark. So yeah, Mark Nichols, Chief Executive. As part of our strategy to implement a license model for all our applications, we've completed the transfer sales and service to our channel partners in the US early this year in order to improve our customer service and reduce our costs. The sale of this majority will be paid ongoing fees. They'll be paid ongoing fees for use of Xorbs by customers, providing high margin return on our technology without any physical involvement in the supply chain. The approach is consistent with our license agreement signed with the largest commercial laundry equipment and companies in China and India. Should like it, Mark? Do you think it's good? Are you a groundbreaking company, Mark? Are you? Then buy some stock then. Let's be honest. Why didn't you want to share in the business? You probably have lots of options. Options are risk-free, pretty much, aren't they? You don't have to take up the option unless the share price has risen, unless you're in the money. Put your money where your mouth is, Mark. If someone's watching this who has any contact with Mark, all right? Mark, do you know what would boost the share price? Because it's at an all-time low. That's how you're judged on the share price. Do you know what would boost it? If you put 300 grand in at 1 year's wage. And you think, what? Are you kidding? Well, hang on. If you believe in the company, surely you'll get multiples of that back. Will you? Surely. If not, why are you working in the company? Pretending. Are you just pretending it's a breakthrough company, a fantastic company? Or do you genuinely believe it? If you genuinely believe it, put your money where your mouth is. Chuck 300 grand in. Go for it. Say, do you know what? I'm going to put 300 grand in. In fact, I don't hit this year's wage in cash. I'll just have shares of Xeros. Because you know what? If I put the cash I earn in a bank or something, then it won't earn anything. But if I take the shares of Xeros, and I believe it's going to be a company worth hundreds of millions, because I believe the tech is cutting edge, and I believe it will be worth hundreds of millions, then that's the best ever return I'll ever get on my money, ever. So go on, put your money where your mouth is. 300 grand this year's wages in shares. That's all you need to do. And do you know what? The share price would fly. Pretty much guaranteed. Guarantee it. Okay, let's look at some charts. First company, Agronomics. some decent articles out this week about clean meat. Like I say, it's very controversial, this. People do not want to believe that lab meat or cultured meat will be a thing of the future. Let me tell you one thing. Do some research, okay? Watch some videos below. It has to be. It's going to be. We cannot carry on with the way we are eating meat with a growing population. At the moment, it's pretty much unsustainable. If one more person is born on this planet who wants to eat meat, it's going to be even more unsustainable. It's the way forward. It uses less land, okay? And why? Because do you realise how much land is needed for livestock? A phenomenal amount. 80% of farmers' land is used by livestock or feed. Now, the feed is phenomenal. So we need land for the feed, to feed the animals. And the water is phenomenal, and just pollution from these animals. But, so if we had, less animals to feed, that grain could be used to feed humans rather than, with the middlemen, the middle animals. The grain is grown to feed the animals, to feed the humans. And then I think it's only 37% of all animals, the calorifics of input, from 100% to only 37% we get from this. Such a waste of energy as well. So we use huge amounts of land for the grain, huge amounts of land for the animals we put on. Well, we don't need that. And then we have obviously grain for humans as well. But if we cut down the animals, we wouldn't need so much. But the water needed, and the land needed, and just the amount of energy needed is phenomenal, and we can't sustain it. There'll be an extra 2.5 billion people on the planet by 20 years' time, or 25 years' time. And at the moment, we are the infrastructure and the land. If we want to carry on, we'll have to do massive deforestation. A place like rainforests, huge amount. We need, what is it? Is it 1 billion hectares we need next 20 years? We can't do that without cutting down lots of trees, which again will kill the environment. We need trees. They are the lungs of the world. It needs change. Anyway, this is the chart. So there we are, testing up level here like this. And look at the RSI, just building. Look at this. Look at the MACD. Again, it's converged. Now it's divergent, which is on the way up, which is quite nice. Positive divergence. I'm so tired. Positive divergence. Hitting this line here. That's quite nice. It's look at the 50-day moving average, moving up. 20-day moving average, moving up. It's all looking good there. Okay, let's look at Bidstack. I did mention this a couple of times. It's trading the range. Look at that. Look at that blue line there, right? Resistance here, okay? And then it comes down, bangs through it. Then it uses that as support, look. Exactly where it couldn't get through last time, it used its support. So previous resistance equals future support. Then it goes up here, trades in this little range a little bit, comes down, bang, hits his head there once, twice. Comes up here again, tests again, so 27 pence. Comes down again, tests again. How many times can it test the support? Well, the more it tests it, the more powerful that support becomes. But of course, it may be a time, it may break down below it. What we'd like to see is it breaking up here again, okay? Above this 34 pence, and ideally above 37 pence. I think it'll happen. James on the podcast, he's a very sharp guy. I like the guy. And the fact that, PubGuard have accepted 34 pence a share, and they believe in Bidstack. And he did, if you listen to the podcast, right, there's several things going on there. I mean, and do you listen to what Justin said, Wenchka from thing? They wanted to go with Bidstack, regardless that they've been, approached by other companies. Because he said Bidstack is the most exciting, dynamic way forward. They like the company. So it says a lot, I think, and I genuinely think it's an excellent synergy there. And James says, be patient, people. Okay, listen, we can understand. Bidstack is now a 60 million market cap. It will move a lot slower. This movement, I believe, from when it was done at 5 pence to 40 pence, is the fast, easy money. Okay, so if you're in there, well done. But this is still a company with a lot of potential, and it could be bought out. But I think James will resist being bought out. But he says what he's doing at the moment takes time. They're putting 1 year's worth of work, which should take 3 years, to enable them to scale seamlessly. And that's very important, because once operations are all up and running by Q4 or Q3, he reckons, and then they start monetizing that in Q4, there can't be any mess ups here. It's got to be seamless. And that's when the till money will start. Ka-ching. I couldn't say that then. Ka-ching. I'm so tired, I can't even say ka-ching. But that's when the money will start rolling in. Okay? And then it'll really ramp up. And Anzu, again, do you know what? Anzu, a competitor, have raised, $6.5 million with the help of WPP, one of the biggest advertisers in the world. Just proves, isn't it, that this is a very exciting sector. But, as Jim says, they've now lost their neutrality. There are advertising agencies around the world that are very competitive that will not advertise with them now because they're with WPP. James says Bidstack doesn't want to lose that neutrality, which is very interesting. So let's hold that support. If not, it's coming down to what, this area? 23. But let's hope we'll have some news out soon. It's Q3. But like I said, people think, when James said news will be out in Q3, people are expecting it on day one. We're not even halfway through Q3 yet. Patience is needed. I believe James will deliver, and the team is fantastic. I believe he'll deliver. Okay, let me just put these in order. Bids, icon, yes, my people's punt choice. There's no data on that yet on the chart. Immotion's having myself. I don't understand this. This is now, you can now buy this with the directors piled in. Directors piled in here, and there's good support here as well. Look at this. It's down here. This is where, around at this level here, is where the clever money will be acquiring slowly. And then news will come out, it'll start to move up. But this level here, when it's gone quiet, when no one cares, people looking the other way, it's where the clever money is acquiring. Look at this buy here, buy levels. This is where the clever money is acquiring, I believe. When it's cooled off, nothing's happening, everyone's looking at the hot stocks. And before you know it, news will come out, this will start moving up again. And people think, I should have bought that back down there when everything was quiet. Buy when it's quiet. When the herd is shouting about it, it's too late, move on. NFX, it's had a bounce. I'm glad of this. I'm really glad of this. Hopefully, we're going to get Dan on the podcast very soon. Look at this, bounce up to this level. Look at that. Didn't like it down there. Whoosh, big up day. Look at that bounce in the RSI. Lovely bounce up there. That's good. Hopefully, we've seen now a level. It'll trade a range along here until we get more news. And then hopefully it'll take off again. But this, we've seen the level. I did scale in here a little bit early, but I was in from here. Didn't really scale in at all. It just went up crazy. So I started scaling in here. I believe in this. So there's lots of things going on here. NXP2. Have a look at that. I mean, NXP1's, it's starting to earn. It was low risk. And of course, the royalty payments or milestone payments weren't big because it was low risk. But it's provided them with initial cash. And listen, people saying, hang on, the Chinese partner hasn't paid them. It's a bit delayed. It's hard work getting money out of China. But they've been with this Chinese partner for a long time. They've already had several payments off them. They're not going to start sort of scamming them now, are they? And Dan said, I did email him recently. He said, no, listen, I've complete faith in the company. I've worked with them a long time. I've been over there enough. It's fine. So the money will be coming in. Like the potential on NXP2, have you seen that? Have a look at the early trials. It's going very well, very encouraging. The EVA's deal with cannabinoids. Payments there, milestone payments up to 52 million. That's almost double the size of the company. That's nuts. Okay, let's move on to the next one. Open Orphan. I do believe. I like Cahill. I think he's going to deliver massively. He's starting to put together a cracking board. And again, at its lows. This is when the clever money starts scaling in a little bit. At the lows. That's when it's going to happen. What else we got there? Power Energy. Is it worth looking at this? Will they deliver? I'm going to... What's happening here? What's happening here? Wow. Oh, hang on. Look at this. Has it? That's a wedge there. It's broken another wedge. Look at that. That's what's called a wedge. That may be quite encouraging, that. I would like to see it close up here, though, above 5, because this is where their shares, nominal value of the shares are. I'd like to see it closing above this. Look at the RSI. Very interesting. They've got Q3 until I move my money out elsewhere. I'll put it into gold or something. What's next? Oh, what did you call me, senorita? Been playing that song a lot recently. I really like that. Have you heard of that? Shawn Mendes and Camila Cabello. I like it when you call me senorita. Shawn Mendes. He's got it, hasn't he? Wow. Anyway, Polarean. Again, there's going to be some sales going here. There's opportunity here. This is what's going to happen. This is going to be. They're going to get. This is what's going to happen. They're going to get the phase 3. No problem. Nailed on. Done. They're going to release the news. Share price is going to fly. Amphion is going to start selling. Bring it back down. Opportunity there. You know, the de-risked already. Phase 3 is done. And then you get a big seller come in. That'll bring the share price down. And then you can acquire some shares. And then Amphion's done. And then... whoosh, I don't know if that's going to happen. That's the ideal scenario. That's what I'm hoping is going to happen. Skin. What's that with Skin? Yeah, let's test this level. It's bounced up a little bit. So we may see this now in a trading range. Hopefully, with some more news. Jerry and the Pacemaker's working hard. Always working hard, Jerry is. Always on Twitter, batting it out. He's a guy you can count on. He's a hustler. He's a mover. He's a shaker. Jerry and the Pacemakers. I have faith in Jerry. I do have faith in Jerry. Invest in people. People are behind everything. Good people, invest in good people. All right. Again, safe stay. Invest in good people. Larry Littman took what's it called? Safe Store from double-digit market cap to 1.3 billion. He sold up before that, of course, but he now says hostile market has more opportunity in it. He's got skin in the game. John on the comments below in the last video said, I would like to invest in safety now because the recession is coming. First of all, we don't know if recession is coming. Secondly, I think this is one of the best bets ever in recession. I think it's completely recession proof. You can stay in major cities for 12 quid. Where else can you, if you want to cut back, and they've said we'd only get the young people staying in hostels. That's the image they give out on Instagram. But a lot of corporate people use Safe Stay. You can get a room, cheaper than, or it compares with Premier Inn. It's nicer as well than Premier Inn and all those other ones, and Holiday Inn, Holiday Express, whatever. It's nicer. So I think if you are looking to cut back, Safe Stay is the ideal option. Major cities. They're expanding, they're going to be profitable, they've got cash, they've got a management team. What's not to like? Under net asset value. £6 million below their net asset value. It's a bargain based result. At an historic low, about to become profitable for the first time ever. And expanding, using their own cash to expand. Don't understand what's down here. There's a seller. All I can think of is the seller, Mighton. Pressure on the shares all the time and very liquid stock. Not many people know about it. I like. Unless it's something, left field I'm not seeing, which of course I wouldn't because it's left field, I think Safe Stay is a cracking buy. They're turning over, £15 million? They're going to be profitable. Their market cap is 21 million. They're like 9 million in cash. That's insane. I can name loads of companies. Down in the back. And they're valued a lot more highly than Safe Stay, just on potential hype. Even resource stocks, and oil and gas stocks. Nuts. Crazy. Way education, very quiet. Hopefully Jacqueline's going to do a bit more PR stuff. I topped up here. They've come back down, which is quite annoying. But I do believe, again, cash generative, cash in the bank. What's half their market cap is cash, pretty much, isn't it, I think? What is their market cap? Let's have a look. Yeah, it's 11.8. I think they've got about 5 million in cash. Don't have to go back to the market. I believe online education is recession-proof. Again, this is what I did back in September. I looked for companies that are recession-proof, and I believe this is. Why should online education get affected by a recession? Shouldn't, do it? And last one, Xeros, of course, XSG. It's not doing anything. Mark! Come on, fella. Come on, fella. Put your money where your mouth is, eh? Put your money where your mouth is, eh? Come on, man. Don't know what accent that was. Okay, I just want to mention that any company I've covered on today's video, I've done, previously done more in-depth coverage of them in other videos. So check out, in fact, have a look at this video. Go to my channel on YouTube here, and you'll see home and videos. Click videos, and you'll see all these videos here. But click any video, like the latest one here, and let me just pause that for a second. And if you scroll down, all right, you'll see Show More. Okay, just below my face there. Show More expands this menu, and you can see here some previous company videos, A to Z, Agronomics. So you can see all these videos here, all scroll down, and then other videos to watch, 10 lessons I've learned from investing in small caps, how to set up a chart for technical analysis, my stock picking strategy, how I use relative strength, how I monitor share price momentum, what's a balance sheet, what's a TR1, what is MACD, about me, and so that's all underneath that show me bit, right, which is just below my head there to expand the video. Okay, let's look at my share performance on the companies I've mentioned in the videos. Bidstack still a winner there. I didn't have much to say about Bidstack today, even though Jim's on the podcast. So I've travelled, 5.5 hours this afternoon from West Wales all the way to the south coast of England. So I'm a bit tired, and I didn't have time to prepare too much, but I will cover them previously. I think James did a lot of stuff there. I just did mention a couple of things on the video there, on the charts. But yeah, I'm confident in James there. Big dish sold. Nuformix 160%, Agronomics 57%, Polarean 28%, Integumen 15%, Power 7%. You see that? Open Orphan 4%, 3%, Immotion there, triple digits or double digits on those three there. But I have belief in them. What I do in Immotion and Safe Stay, Xeros, I don't know. Mark, buy some shares. Convince me. Here's my actual performance. Of course, I have scaled into some of those companies, so I've done a lot better in my actual portfolio than I show there. Because when they drop, I will scale in if I think it's at the right level. I've done it with a few companies. I've done it with Immotion. I've done it with Xeros. Actually, it might be in Xeros. I've done it with Nuformix. Okay, 52% 3 months, 82% 6 months, 108% 12 months, and 160 over the last 18 months. That's it. Thanks for watching. If you enjoyed this information, listen, pay it back by hitting the subscribe button and the notification bell. Have I ever mentioned the bell? Really? I'll chat to you about the bell. Only kidding. Listen, as you see there, right there, my face there, subscribe there, then hit the notification bell, and also you can see some videos there you can check out. Muchos apreciados.